Welcome to 3 Minutes on Markets and Money. I'm Danny Ratliff, Certified Financial Planner with RIA Advisors. Certainly an interesting week in the markets. Yesterday we saw quite a bit of a rebound. Today futures are pointing up after quite a rough week. Interesting. We have seen markets tumble on great news. We've seen markets soar on bad news. So is good news bad news once again? Inflationary pressure certainly has put the stranglehold on markets for a moment. We are seeing wages increasing for those low income earners. Lots of companies struggling to find people to work. We are finding that now states are declining federal unemployment. We are up to 14 states at the moment. This should help get people off the rear and hopefully into a job. Small businesses or businesses at all are struggling to find good employees because of federal unemployment benefits. Even President Biden noted that this week, saying that this is something they're going to have to address. So this is something to watch for because this could change the landscape rather quickly and hopefully prop up those job numbers and get these things trending in the right direction again. The House Ways and Means Committee has passed the first leg of the Secure Act 2.0. A couple of things to note. This does increase the RMD age or required minimum distribution age from 72 to 75. However, not as a one-time foul swoop. This is actually going to be indexed over a decade where it will increase very small until you get to 75. So it won't be as easy as what we once thought because it is not a big revenue maker for them. In this bill, they're also talking about the Rothification of those catch-up provisions, which means that once you're 50 and older, you typically can contribute a little bit more to your IRA or your 401k accounts. So those retirement plans get a little bit of a boost. They're talking about now, instead of that being pre-tax, you'll be contributing after tax, and employer matching contributions could be that as well. Retail sales data was just released for the month of April, and it was relatively flat. We saw in March, stimulus checks burned a hole in people's pockets. Lots of goods were being purchased. We're seeing a shift in April towards consumers spending more on services than goods. What we're really watching for is what happens when we stop receiving those stimulus checks. Will consumers continue to spend? Will the goods and services still be a top priority? We're going to be watching for that, watching inflationary data, watching wage growth. These are all going to be very important things in the future. Obviously, interest rates and what happens with the Federal Reserve. So we'll keep you posted here at Real Investment Advice. If you have any questions, go to realinvestmentadvice.com. I'm Danny Ratliff on 3 Minutes on Markets and Money.